What's going on, homeowners? I'm Malaki. Today we're going to talk about a very important topic, how to protest your property taxes. Now, we're just going to do a general overview. If you want full details on the strategy, look in the link below and you'll see a link for my full comprehensive guide that goes into depth on how to do this. Full disclosure, I'm not a certified financial planner. Everything we're going to go over today is my opinion. It's what I do to protest my property taxes each year. Always get professional advice specific to your situation. Now let's get into it. Strategy number 1, the homestead exemption. To qualify for this, the house has to be your primary place of residence. Investment property doesn't count. It has to be your primary place of residence as of January 1st of the tax year in question. Now you have a certain timeline to file for your homestead exemption between January 1st and April 30th of that year. Two main benefits to getting this. Number one benefit, whatever your value is, they're going to deduct a portion of that as far as what you have to pay taxes on. In Texas, that deduction can be up to $100,000. So for example, if my property value is $300,000, I'm only going to pay tax on $200,000 if my exemption amounts that high. The second main benefit, it caps how much they can raise the value of your property year after year. In Texas, that cap is 10% a year. So for example, if I buy a house that costs $200,000, the next year, if I have my exemption, they can only raise that 10%. So they can only raise my value by $20,000. So it doesn't matter if I have a bunch of houses around me that are selling for $400,000 a year. That might be my market value, but they can only raise my taxable value by 10% a year. Very, very valuable tool to have. Also, they have extra exemptions if you're over the age of 65 or if you're disabled. Now let's get to strategy number 2. No dry snitching. I call this a strategy of silence. Now, when you close, the taxing authority, they're going to send you a letter in the mail trying to get you to tell them how much you spent on their property. You don't have to disclose anything. Don't give them any information. Put the burden of proof on them to make them come up with the value. Don't share any cost details. Don't share any architecture plans or anything from the city. Don't share any appraisal reports. Don't share any sales comps. Don't share anything that lets them know what you paid for their property. We don't dry snitch. We make them find that information out all on their own. Strategy 3, the ability to protest your value. Every single year you should be doing this. Every single year they're probably going to try to raise your value. So you should be fighting it. Just because they raise it doesn't mean you have to agree. Now there are two main ways that you can protest this. One is the sales method and one is the equity method. The sales method, they're saying that we have comparable sales to support our value. The equity method is typically where they don't have any comparable sales, but the houses in your neighborhood that haven't sold have likely been increased in value by the taxing authority, and they say yours should be increased in value along with theirs. The goal when you're disputing both of these methods is to destroy the comps that they have. You're going to show, hey, either sales or equity method, my house is not comparable to what you're using. My house is more comparable to the comps that I choose to use that have a lower value. So the question is, how do you prove that? You can get sales comps of your own. You can take pictures of your property to show that those comps that they're using have things and amenities in their house that you don't have in yours. Like they may have better counters. They may have newer floors. They may have a new roof, things of that nature. They're going to want to see pictures to prove the condition of your property isn't like the condition of the property that they're using as comparables. If you have damages, you can get estimates and quotes from contractors to show I have to spend X amount of money to get my house up to the level of the comparable that you're using. All of that information you need to have as support to prove the value of your property. Now, when you protest, there are 3 negotiation rounds. Round 1 is with the taxing authority itself. Round 2 is with the appraisal review board. And round 3 is with the independent state arbitrator. Round 1, again, with the taxing authority itself, that's one individual that works there. It's really a luck of the draw. Depends on who you get on that day. Sometimes I've been before where I've had tons of information and I thought I should have won, and I got the wrong person and they denied me. I've been where I didn't have any information and I got a person that literally asked me, "Hey, Malaki, what do you want it to be?" And they gave me the value that I wanted. So it's really luck of the draw. If you don't win there, go to round 2, the appraisal review board. This is a board of individuals that don't work for the taxing authority. They're volunteers. Usually it seems like it's a bunch of retired people that are looking for something to do. It can be between 1 and 3 individuals on the board. I always pick the option for one person. I've noticed in the past where I had the 3-member board, usually it's 2 individuals just kind of going along with what one person is saying anyway. So I just go ahead and get the one person. If that doesn't work, go to round 3. This is the independent state arbitrator. Unlike the first 2 rounds, this round's not free. You have to pay a fee to get to talk to someone in the state. Now, if you win, you get your money back, minus a $50 administration fee. If you lose, then you don't get any money back. Now, losing means you don't have a decrease in value from what the appraisal district, what the taxing authority said it would be. If they decrease your value at all, then you get your money back. Now, what I've noticed in the past, once it gets to the state level, typically the taxing authority doesn't want them to come in and review their cases. So they'll typically call you to settle. Always continue to fight up until the last level. You have a lot of power with that independent state arbitrator. Now here's the hard part. Do you do this yourself or do you hire some professional help? Pros to doing it yourself. A, you get to learn how to do the process. The more you do it, the better you'll get. You get to have full control of the process. But most importantly, any savings that you get to keep everything. Now, hiring professional help, the key word is hiring. That's not free. They usually take a percentage of what they save you. But again, it saves time. You don't have to do all the work. So again, that's a brief overview. Check out the guide for complete steps on how to do all of these strategies. It's about 32, 33 pages or so. Most importantly, remember, protest every single year. Most people don't protest their taxes. So what winds up happening is when the county starts fighting with the equity method, they can always raise to higher values because people typically go with the values they set and no one ever goes in to dispute them. So you're doing your neighbors and everyone else a disservice by not fighting your taxes every year. Your mortgage is typically locked in and controlled. It's at a fixed rate. Your property taxes are typically what makes your note increase significantly every year. This is a cost that you can control. You just have to put in the work to do it, whether you're doing it yourself or hiring someone for help. Good luck, y'all. Peace.